in that question, that is what we'll be using. So you have the question on your phone or on your PC, and then you follow what we'll be doing on the screen. So basically, that will help us, because I won't project the question here at the same time sharing what I'll be doing. It will mess up things. So if you have the question from your end and you follow the discussions on the screen, that one will make our work much easier. All right. So before we start, as I mentioned, I believe we've already studied control accounts with the face-to-face, but we'll still touch it. So I would like to ask, do we still have problems with control account, those who are able to make it to the face-to-face? Do we still have problems?
Hassan, good evening.
Yeah, good evening.
Hassan, this is Lily. Me, I couldn't make it to the face-to-face.
Yes,
and
we have.
For us that was online, we actually couldn't hear or see what was being presented. So it's like we did oral. So if you can help us.
I understand. I understand you. I understand you.
I hope you are fine.
All right. So I'm fine. I'm very fine, dear. All right. I've heard you. Mr. Foster, please let me hear you. Mr. Foster. Okay. Hetty.
Yes, kindly check your DM.
Yeah, I've seen it. Okay,
All right,
I've seen it. Thank you.
Right.
Mr. Richard.
Okay, mine too has to do with I'm new. It's today that I joined your class, so I wouldn't be able to understand what you did earlier. So
Don't worry.
I'm pleading
I
the
understand.
wisdom.
Don't worry. I understand you. Okay. Yeah. Don't worry. Just make sure you follow or you pay attention. You will learn something. Okay. Yeah.
Okay. Thank you.
So please I will take one more suggestion. The hands are many, and time too is going. So, okay, Hetty, please let me hear you.
Sorry, I think after I spoke, I should have brought my hands down. Sorry.
Okay. So, Tisha.
Yeah, so I was saying, me, whatever we did at the face to face, though I was present there, I was totally lost. So,
I understand.
Yes.
All right. Amina. Amina to Yunusa, can you hear me? Okay, so I think
with the control account, yes. Please, can you go over it?
Hear you. Please. Don't worry, we'll go over that. Okay. Okay. All right. So I believe you all can see my screen, right?
Yes.
Hello, can you see my screen?
Yes, we can see.
Yes, we can.
Yes, please.
All right. Thank you very much. So just a quick recap of what we are going to learn tonight. Okay. So with control accounts, okay, it is a very interesting topic. And as I mentioned, every year it keeps coming in the end of same exams. So we should pay much particular to that topic, much particular attention to that.
I wasn't supposed to understand.
Madam, please mute yourself.
All right. So a recap of what control accounts is. Okay. So I know maybe some of us might have gone through ledgers. Okay. And then the key or the underlying assumption of ledgers is that, sometimes we do make sales. Sometimes we sell for cash. I mean, we sell and we receive cash immediately. And sometimes we also sell on credit. Okay. So when you are operating ledgers, okay, it is basically the T accounts like this. Okay. So we assume that mostly under ledgers, we operate three main ledgers, purchases ledger as well as the general ledger. So the sales ledger always contains the individual accounts of those you sell to on credit. Okay. And in accounting, anybody that you sell goods on credit is known as your debtor, because that person owes you. So in accounting, anybody who owes you is your debtor. Okay. So the money that person also owes you, we call it we call them receivable. Okay. Monies that you are expecting to receive from what? Your debtors. Those who owe you is called receivables. Okay. The same way, we also buy from people on credit. Okay. So when we buy on credit, it is also expected of us to also pay. So the same way, monies that are also expected of us to pay, the monies that we are supposed to pay people is also known as payables in accounting. Okay. So assuming, for instance, these two accounts that I've just opened are my customers that I have just sold goods to them on credit, customer A and customer B. Okay, I have opened their ledger account. At the end of the month or at the end of the year, I will need to open a bigger account to capture all those who owe me and then also capture those that I owe. So that big account that I will open, okay, to show it is, remember, to summarize those who owe me is what we call the control account. So the control account is prepared to show the debtors of a firm and also to show the creditors of a firm. And remember, debtors are those who owe you and your creditors are those that you also owe. So at the end of the day, the accountant is expected to show everybody who owes the firm and how much they owe the firm. The same way, he also open another account to show those that the business also owe and how much the business also owe these people. And that brings us to what? Control account. All right. So as you now understand that we have people called debtors, that is those who owe us, and also we also have people called creditors. These are people that also owe, right? So we have two main types of control accounts. The first one being what? The sales control account, and then the second one being the purchases ledger control account. Okay, so let me do this. So with the sales ledger control account, remember, that is where we are the sellers. Okay, so we sell to our customers on credit. And the assumption or the broad assumption with control accounts is that we are buying on credit or we are selling on credit. So please keep it at the back of your mind that in control account, we don't buy with cash, we don't purchase with cash. we buy everything on credit, and then we also sell everything on credit. Are you getting that? So at the end of the day, when we are selling as business, so let me say, Hassan, I am the business, okay, and I sell to customer A and B on credit. At the end of the day, I will prepare their my control account to show those who owe me and those that I also owe. Okay, so that is the underlying principle of what control account. So I've mentioned to you that we have two main categories of what control account. The first one being the what? The sales ledger control account. Okay, so the sales ledger control account, and also we have the purchases ledger control account. So this is the purchases ledger control account. Okay, they are all in T form, so we call them, they are all T accounts. So we have also the purchases ledger control account. So remember, the sales ledger control account shows the list of debtors to the business. In other words, the sales ledger control account shows those who owe us. And also remember, from the beginning, I mentioned that those who owe us are called debtors. So another name for the sales ledger control account is the debtors control account. Debtors control account. Okay. And also remember, I also mentioned that the amount that these people owe us in accounting, we call it receivables. Okay, so this is the third name. Okay, so we can also call the sales ledger control account the what? Account receivables control account. Account receivables control account. So you can see that basically it has three names. I'm giving you this because maybe in the exam, yes, we may be expected to what? To open, or to a question will come under control account, but they will ask you to open the account receivables control account. If you don't know that the account receivables control account is the same as debtors control account, which is also same as sales ledger control account, you'll be sitting there not knowing what to do. So that's why I'm taking the trouble to give you all this. Okay, so you can call the sales ledger control account the what? Debtors control account, also the account receivables control account. So let us look at the purchases ledger control account. Purchases ledger control account. So you also remember that in control account, we do everything on credit, right? So we buy on credit. And in accounting, when we are buying, we say you are purchasing, or that is purchases, right? So who do we buy from? We buy from suppliers or our creditors. These are people that we owe. So another name for purchases ledger control account too is what? Creditors control account. So you can also call the purchases ledger control account the creditors control account. So creditors control account. All right. So we are not stopping here because there's another name. So just as monies that we are expecting from people, we call it receivables. Monies people are also expecting from us, it is also known as payables. So the other name for purchases ledger control account 2 is what? Account payables control account. So, or payables control account. So account payables control account. Okay, so these are other names that we can call these two accounts. So so these are control accounts for us. And then if you, and no matter what, in control account, these are the two accounts that you'll be preparing. Okay, the sales ledger control account and the purchases ledger control account. There's no other account that you will need to what? Open or operate. Okay, so in this sense, what we have to understand to better understand control account is that we have to know that with regards to the sales ledger control account, okay, with regards to the sales ledger control account, remember we are selling to our customers, okay, and we are selling to them on credit. So at the end of the day, we know that these people owe us, okay. So anything that will come from us to our customers will be on credit. So anything that we will be giving to them will increase their credit or will increase their debt. Please, are you following? So anything that will come from us, the business, to our customers will be on credit. So anything that we will be giving to them as customers will be increasing their debt. And also remember, anything that will be given to them, they will be on the receiving end. And remember, the double entry principle says that always debit the receiver and credit the giver. So in this sense, the business is the giver and the customers are the what? The receivers, right? So anything that will go into the sales ledger or anything that we will be giving to our customer will increase their debt. So therefore, anything that will increase our customers' debt will be debited to their account. Okay, so at the end of the day, let's say we have made sales to them, we have given them goods. So the sales that we've made to them, it is on credit. It will appear on the debit side of their account as what? Credit sales. Please, are we following?
Yes, sir.
Can I be heard?
Repeat that
Yes,
part
sir.
again.
We are
Please.
following.
Okay, so what I am saying is that this account is for our customers, okay? And then we sell to our customers on credit. So it means that the assumption is that anything that we will give to our customers will be on credit. Are you getting that? So in that sense, anything that we will be giving to our customers will increase their debts. Please, do you understand that?
Yes, please.
So I made an example by saying that let's assume we are selling goods to our customers. So remember, we will be giving party and our customers will be the receiving party. And remember, the double entry principle says that debit the receiver, credit the giver, right? So if we are giving our customers goods, their account will be what? Debited. But also remember, it will also increase their debts. Are you getting it? So that is, it will appear at the debit side. Now let's look at the credit side of the sales ledger control account. The sales ledger control account, the credit side of it shows what our customers are also giving to us. So the assumption is that, or from this point, just keep it at the back of your mind that what our customers will also give to us will be in the form of what? Payment, right? Because remember, we give to them, they are owing us now, and anything they will also give to us, they will be trying to pay us. So anything that our customers will also give to us will be in the form of payment of their debt. And in this sense, they are trying to reduce the amount that they owe us. Please, are you getting that?
Yes, please.
All right. So in this instance, let's say our customers are also giving us cash, right? So if they have given us cash, or if they have paid us with cash, wouldn't that reduce the amount that they owed us? I'm asking the class, wouldn't that reduce the amount,
Yes.
their
Yes, it
indebtedness?
will reduce.
Yes, it will reduce. It will
Yeah,
reduce.
definitely.
Are you getting that?
It
Uh-huh.
will reduce.
So the credit side shows our customers' efforts to clear their debts. And then the debit side of the sales ledger shows the indebtedness of our customers to us. So anything that will increase their indebtedness or anything that will increase their debt will appear at the credit side of the sales ledger control account. Remember, and anything that will reduce their debt will appear at the credit side of their account. This is sales ledger. This is the broad assumption that you should just keep in mind. This is just an explanatory phase of our discussion. I'm just explaining what you need to have in your head to be able to answer control account questions. It is very interesting and very simple, but if you don't understand how to go by things, you'll be confused from the beginning. So that's why I'm taking time to explain this before we take the practical question. All right, so this is sales ledger control account. Let's look at purchases ledger control account, which is also known as the creditors control account or account payables control account. So remember, I made mention that anything that we will sell on credit, and anything that we will also buy, we're also buying on credit, right? So the purchases ledger control account is where we also buy from our suppliers or creditors. Are you getting that? And remember, when we are buying, we will be on the receiving end, and our suppliers will be at the giving end, right? And remember, for personal account, debit the receiver, credit the giver. So here we are looking at the giver here. It is our creditors who are giving to us, right? And they are giving to us on credit. So if they are giving to us, remember, their account will be credited because credit the giver, debit the receiver. So we are looking at our givers here, which is our what? Suppliers. And remember, anything they are giving to us, they are giving to us on credit. So let's say we have bought goods from our suppliers. We have made purchases. Let's assume we have made purchases, okay? So these purchases will be on credit. We already know. So we have bought goods from them on credit. It will show that they give out goods to us. And in our account will be what? Debited. Okay, so so that is it. So they are giving, their account will be credited, and then we will be on the receiving end. And also remember, they are giving to us on credit. So anything that our creditors will also give to us will also add to our debt. Anything that our creditors will give to us will give us sleepless nights. Because remember, there are some people, when they are owing, they cannot sleep. Are you getting it? They'll be thinking about how to pay. So the more our creditors give to us, the more it will give us sleepless night, because the more it will pile up our debt. Are you getting it? So anything that our creditors are giving to us will increase our debt at the credit side because they are giving, so they always give at the credit side. But them giving at the credit side means that our debt will be increasing. And also, remember, in an event that we make efforts to pay our suppliers, by giving them cash, we are trying to eliminate our debts, or we are trying to reduce our debts. And in this case, remember, we will be on the giving side and our suppliers will be on the receiving end. And remember, debit the receiver, credit the giver. So if we are paying, we are giving out, and then they will be on the receiving end. So remember, when they are receiving, their account should be what? Debited. So assuming we also pay our suppliers with cash, their account will be what? Debited. And by virtue of we giving them cash, it will also reduce our what? Balance that we owe them, or the amount that we owe them. Okay? So this is the movement of transactions that you need to understand. Okay? With the purchases ledger, anything that will increase our debts to our suppliers will be credited to the purchases ledger control account. And anything that will also reduce our debt will be debited to our purchases ledger control account. The same sense, when we are looking at the sales ledger control account, anything that will also increase our customers' debt will be debited to the sales ledger control account, because it means that we are giving more to them and we are always giving to them on credit. So it will always pile up their debt. So they are receiving and they are receiving more debt. Are you getting that? So their account will be debited. And in the effort of paying back, their account will be credited in the name of cash to reduce the amount that they owe. And in this case, anything that will reduce our customers' debts will be credited to the sales ledger control account. So I have intentionally used the arrows to show you the movement of what? Transactions that will be entering in these two accounts. And I'm going to pause and give you guys the opportunity to take a snapshot of this screen, because this is what we will need to do our analysis. And with this, it will guide us through any control account question that we face. This is the heart of control account. This is what you need to get in order to better answer any control account question. So you can quickly take a snapshot of this screen, and then I'll also pause for questioning. If you have questions, you bring them before we take the practical question. Please, I hope you understand me.
Yes, please.
All right. So if you have questions, let me hear these questions before we take the practical example.
Hassan.
Yes.
So with this account, if you are opening it, you are assuming that that's the customer or the creditor's account that you are opening for them, but not yours.
Yes, not yours. Okay. So the sales ledger, just see it at your customer's account and see the purchases ledger control account as your creditor's account. I hope you understand me.
Okay.
Yes. So that will put you in a very better position for you to get the analysis right and do the needful. Okay.
Okay.
All right. Yeah, please, any more questions? Have you taken snapshot of the screen?
Yes.
All of us? Because I don't want us to start and then people, okay. All right. So if you are taking snapshots, let me see those who wants to answer, those who wants to ask questions. Yeah, Mr. Frank, let me hear you before we go back to the whiteboard. Mr. Frank.
Good evening. Good evening, sir.
Yeah, good evening, Mr. Frank.
Thank you very much. About the creators control account. Because I can see at that side, we said that when a person is receiving, the account will be debited. Likewise, when the one who is giving, his own will be credited.
Yeah.
But yeah, I can see you have done the purchases at the credit side. So what of the debit side? Are we not going to do that one?
Are we not going to do what?
Are we not going to do any entry there?
Any entry at the debit side?
Yes, please.
You are talking about creditors control account, right?
Yes, please.
But can't you see cash there? I hope you can see cash, right?
Oh, okay.
That is inside the creditors control account.
Okay, yes, I can see it now.
Yes. All right. I hope you are clear now.
Yes, please.
All right. So please, I'm not seeing hands anymore. So I assume that what I've explained has been understood, right? Okay, Mr. Derek.
Yeah, Hassan, good evening.
Yeah, good evening, Senior.
Yeah, please, this one, you will not open any account for any individual, only these two accounts.
Yes, with control account, these are the two accounts that you will be operating. The debtors control account and the creditors control account. Okay.
Oh, okay. Thank you very much.
Yes. And that's why I made mention that this question keeps coming in the exam. And you know that there's only two accounts to be operated or opened. So the only thing for us to do is to try as much as possible to be familiar with these two accounts, and we are good to go. It will shock you what you get in accounting, because accounting, it is not the final answer that matters, but it is the procedure or the steps. What should be done, you do it, you get your mark. Even if the final answer is wrong, you'll get marks for the procedure that you followed up to the final end. That is it. So accounting is very easy to pass, and it's also very easy to fail. All right. So let me talk to Lily. Lily, let me hear you.
Hassan, this thing, it keeps confusing me. Okay, so let me say this. So with cash on the FNS, on our customer side, the credit side, cash no be called credit because it will increase.
They are paying.
Side or go to this, like that's my confused.
Pardon?
With the purchases, who's the purchases no say cash no be called debit side, right?
Yes.
But with the customer side, no, maybe a cash no corner or maintias, yes, am I confused?
So you see, the cash at the debit side of the creditors account is the cash we will give to them. Are you getting that? So, and remember, when we are giving them cash, we are reducing our indebtedness. But with the customers account, the cash is at the credit side because they are paying to us. And then with the creditors control account, we are paying to our creditors. Lily, are you okay now?
I am okay. So if I am following your arrow, with the customer side, no, it's CRDR, right? And then the purchases is DRCR, like a 10 around, like as a 10 and something like that.
Yes, so that is one way to understand it. The sales ledger control account is the opposite of the purchases ledger control account. Are you getting that?
So,
yes, that is
confusing me.
So that's another way to understand it. Just see them as opposite accounts, okay?
That's fine.
All right. I hope your worry is now gone, right? Your problems are now solved.
I'm following. I'm still in the forest. I'm following.
All right. So thank you. So let's listen to Mina Asari.
Yes, sir. Good evening.
Your network, your network or your
Hello.
microphone? Yeah, hello.
Yes, sir.
Yeah, I can
Yeah,
hear you.
please. Yes. Please, based on the explanation you gave, how I understand it right now means for the debtors control account, when when someone buys from you or makes sales, like
Yeah.
buy from you, you will record it at the sales side. That is the left side. And in case they make payments, that's where you record it at the cash side, right?
The credit side.
The
So when they
table,
make payment, you
we
record
make
it
two
at the
tables.
yeah.
Yes,
Yeah.
the debtors control account, in case someone buys
Yeah.
from me, I will record it on the
Yeah.
where you've written the sales.
Debit side. Yeah, the debit side.
Yes, please. And in case they make payment, then I will. Oh, okay. Thank you.
Called it at the credit side.
Credit
I
side.
hope you understand.
Okay.
Yes.
Okay, thank you.
Yes. Lily, I think you can lower your hand, or you still have a question. Lily.
No.
All right, so please lower it for us. So, as I mentioned, I believe all of you have the question that is shared on the study platform, right? Right?
Yes.
All right. So, if you have it, let's go to the question. Let's take practicals. We are now going to do practicals. Okay. So, all that I will do is to erase these arrows. I'll just erase these arrows and then, so let me redraw my accounts again, and then let's take off. I mean, control accounts is very interesting if you pay attention to understand them. It is not any difficult topic that you should be worried about. And the good news is that it also keeps coming in the exam. So the only thing that will make you understand this better is to practice more. Try to solve more questions under it, and it will open your mind the more. All right, so let's do this. I always know that in control account, I will be operating or I will be opening 2 accounts, no matter what. So I will have my first account opened, which is the sales ledger control account. Okay. And then it is also known as what? Debtors or total debtors control account. So debtors control account. All right. So I will have my Ghana cedis here, my Ghana cedis at the credit side too. And then I will also open the other one. I call them twin accounts, because once one is there, the other 2 must be there. That is the purchases ledger control account. So let's see. This is my purchases ledger control account. Purchases ledger control account. And also, you know that this account is also known as what? Creditors control account, because this is our creditors what? Account that we are looking at. So creditors control account. Okay. So I also have my Ghana cedis at the debit side. I've already made you take snaps of the 2 accounts. So what we need is to take practical example and see how things go. So please, I will need one person, a volunteer, to be reading the question for us while we do the analysis.
Hassan, can you do the
Please,
CRDR so that we are getting
okay.
confused?
So this is the debit side, and this is the credit side. Okay. Hey, Lily, I can see that you like soft life. All right. So here too will be our debit side, and this side too will be our credit side. Okay. I believe that is okay by you now.
So Hassan, it means that it's more about where you put the DR and the CR. You knowing what to put in the DR and what to put in the CR, right?
I don't get you. Your voice is faint.
I'm saying that. So it means that it's not about where you put the DR and the CR. It's about knowing what you put in the DR and the CR. Both in both sides.
In both
That
sides.
was where I was
The
getting
DR and the DR and CR, that one it doesn't change. You never see debit at the right hand side. Debit is always at the left, credit is always at the right. So what is left is for you to know this transaction, should it go to the debit side or it should go to the credit side? That's all that you need to know. Okay. Yeah. All right. So please, who will be doing reading for us? Who will be reading the question?
Hassan.
Hello. Yes.
Yeah, it means that.
Please.
Hello, Hassan. Can you hear me?
Please let me hear you.
Yeah, I said that then it means it's not compulsory that you should write debit and credit at the top.
No, that one is not compulsory for you to show it. Okay, but I am just writing it. I mean, for those of us, as Lily mentioned, who may need them. Okay, but it's not necessary. You don't even have to write them because you already know that the right hand side is the credit side and the left hand side is the debit side. I hope you get it.
Yes.
So writing it is not advisable. Okay. All right. So please, who will read for us? Madam Agnes. You read.
Please, the person who is disturbing, please mute your
mic. Roland, mute your mic.
Oh, Mr. Ima. Mr. Ima.
I can read.
Yes, my boss.
I've been looking for you at City Campus for the past 2 weeks.
Oh,
yes.
I was around. I was there.
After the class, flash me. We can get your number.
Yes, sir. I will, sir.
All right. Thank you.
Thank you.
Who is reading?
I can read.
And please your name, Tisha.
Tisha, yeah.
Okay, all right. So Tisha, please read for us. Let's see what we can learn for this evening. All right.
So practice question on control. The following balances and transactions were extracted from the financial records of a Jasu enterprise for the month of June 2018.
Jasu.
Yeah.
Okay. So let me do this. I'm coming. Okay, so we continue, Tisha.
Okay. So balance at 1st June 2018. Purchases ledger 12,450 cedis credits.
So please pause for us. So as you go, we too will be following you. So don't go too fast, okay?
Okay.
Because we'll be following you back. All right. Okay. Please, you said purchases ledger. Take it again.
12,450 Ghana cedis.
12,450 Ghana cedis.
Yes.
Is it debit or credit?
Credit.
Credit. So please, you can all see they have given you a balance to take to the credit side of the purchases ledger control account. So as they have given you, you also send it. Okay, this one it is straightforward. So you just go to the credit side of the purchases ledger control account or the creditors control account, and you write balance brought forward. Balance brought forward. Please, what was the amount again?
12,450.
12,450 Ghana cedis.
Yes.
You are done with the credit side. What was instruction given?
For now, it's just a table with the figures.
So I'm asking you to move ahead with the next information.
Okay, so the next information, 100 cedis debit.
For purchases ledger control account?
Yes, purchases ledger.
Debit is 100 cedis. So it means at debit side, we should put the 100 cedis at the debit side. So we come to the debit side and then we write our balance brought forward 100 cedis. Please, I hope we are all following this. All right. So,
Yes,
Tisha,
Hassan.
give us the next information. Yes.
Sales ledger.
Hassan, so balance brought forward, no, because like the person was owing long time. Because this come down, brought down, it's confusing me. So this one is balance forward because like or the card identity, the card we are back, right?
Yes. That is it. Okay. All right. So Tisha, give us the next information. You are our information minister tonight.
No problem. Sales ledger.
Okay. So they are asking us to go to the sales ledger. Let's go there. This is sales ledger, right?
Yes.
And what is happening with the sales ledger?
76,000 Ghana cedis debit.
76,000 Ghana cedis debit. So it means that we have to take these 76,000 cedis to the debit side of the debtors control account. So we come to the debit side and we write balance brought forward. And then we put the figure there, 76,000. Okay, we have successfully done that. So give us the next information, Tisha.
Sales ledger, 220 cedis credits.
220 cedis credit. So we record the 220 cedis, add the what? Credit size. Okay, and then we show that this was also a balance brought forward for that period at the credit side. Please, am I making sense?
Yes, please.
And I hope we are together in this. Nobody is left behind.
We are together.
Sure.
All right. Thank you very much. So, Tisha, we are at your door. Take us to the next information.
Transaction during June 2018. Credit purchases 530,000 Ghana cedis.
So credit purchases, it means that here we are buying, right? And when we are buying, remember, we will always buy on credit. And who do we buy from? Do we buy from our customers or we buy from our suppliers?
Suppliers.
We buy from suppliers. And remember, suppliers, you can also call them creditors. So it means you have to go to our creditors control account. I hope it is understood.
Yes.
All right. Remember, when our suppliers is selling to us, they will be on a given side, right?
Yeah.
They will be on the given side, so their account will be credited in the name of what? Credit purchases. This is the value of goods that we bought from them. Tisha, what was the figure for credit purchases?
530,000.
530,000. Hey, we'll kill
Madam Anas, please
our
mute yourself.
suppliers.
Anas, please. I can't go.
So remember,
Anastasia.
Please mute yourselves.
yeah, can we go ahead?
Yes.
Okay.
Yes, sir.
So remember, when we are buying on credit. So our suppliers will be on the giving side, right? They will be giving us. So they are supposed to be what? Credited with what? Credit purchases. And remember, by virtue of them giving to us on credit, it will also keep piling up our debts. Okay, so that is the understanding. So give us the next transaction, Tisha.
Cash sales. 820,000.
Cash sales.
Yes, 820,000.
We won't record it.
All right. So this bring me to a very interesting. We have items not treated in the control accounts. Items not to be treated. Okay.
Yes.
Items not to be treated. One, provisions, we don't mind them. Okay. Provisions. Provision for doubtful debt. So let me just write it. Provision for doubtful debt. We don't treat it in the what? Control account. Okay. Also, we don't treat cash sales. Okay. Cash sales, if we see it, we pass by it. Cash messages, if we see it, we pass by it. We ignore it. Okay. And also, carriage inwards or carried outwards, if we pass by it. So I am listing them so that you take note of them. When we come across them, we just pass by. Carriage inwards. Okay, and also carriage outwards. Number 5.
Sorry, I don't say this, but I don't know why you don't record.
You there?
I said I wanted to know why you want to record.
All right. So please, I'm coming. So please, as you did with the first one of these items, so that you take note of them. So when you are done taking the snapshot, just draw my attention and then we can move ahead. Please, when you are done, just let me know, okay?
Please, we are done.
We are done.
We are done, please.
You are done. Okay,
Yes.
so please take note of these items or these transactions. Anytime you see any of them in a control account question, you say bye-bye to it. You don't touch it. They are simply distractors. The examiner has kept them in the question to distract you, to test your level of understanding of the topic. So if you don't know and you record them, I mean, your closing balances will never be as it should be. It will change your closing balances. So that's why you always have to skip them when you see them. All right. So, Tisha, what was our next transaction after credit purchases?
Hello.
After credit purchases, we have cash sales, 820,000.
Cash sales. So remember,
Yes.
cash sales, we ignore it, right?
Yes.
So
we
we
move
don't
on.
tackle
Credit
it.
sales.
We move on. Credit sales.
Credit sales, 700,000.
Credit sales 700,000. So remember, we as business, we are now selling. And who do we sell to? Do we sell to our suppliers or we sell to customers?
Customers, so debtors.
We sell to our customers.
Yes.
So therefore, it means that we should go to our customers account, which is the debtors control account, right? All right. So we are now in our customers or debtors control account. And then remember, if we are selling to our customers or our debtors, we will be giving out and they will be on the receiving end, right?
Yes.
Yes.
So the sales that we have made to them will reflect or will show up at the debit side of their account. That is simple. Okay. So we are selling to them, they are receiving. So the amount should appear at the debit side of their account. What was the amount for credit sales?
700,000.
700,000. So you just write credit sales. So let me just abbreviate it. Credit sales 700,000. All right. I hope it is fine. We can move on, right?
Yes, please.
Hassan, this was what I was talking about. But the credit purchases, the credit purchases goes to the C outside of the creditors, but back on okay, credit sales comes to the G outside of the debtors.
Are you confused?
I'm not confused. I just want to understand.
Okay.
I just want to know if I'm right.
Yes, you are right. Okay.
Thank you.
You're welcome. All right. Yeah. Hello. Yeah.
That's why we said that some of the accounts go to.
Please, I can't hear you.
What I'm trying to say is that some of the accounts don't mind them like cash.
Your line is very faint. I can hardly hear you.
Hey, do you want my name?
Hello, sir. Hello. Hello. Hello.
Yeah, can you hear me?
Yeah, now I can hear you well.
All right.
Yes, I am trying to say that you are saying that some of the accounts you need not to mind them, like the sales account or the cash.
Some of the items.
That you have in
some
hand.
of the items.
So how will I know that these are the cash that I have in my hand if those ones are not needed?
I don't get your question, sir.
Like the cash sales and the cash purchase. You said, so I want you to give me some example and the inwards and the outwards, those ones, so that I can also follow you people.
Cash sales basically means that you are buying with cash. Are you getting that?
Okay, sir.
No, cash sales basically means that you are selling and receiving cash. You are not selling on credit. Also, cash purchases also means that you are buying with cash. You don't buy on credit. Are you getting that?
Yes, please.
But also remember, the underlying principle of control account is that we are either buying on credit or we are selling on credit. Are you getting it?
Okay.
So whenever you are buying with cash or you are selling for cash, then you no get issue because ours is on credit. We like borrowing. So when you have money, you no get issue. We are only interested in the items that we will buy on credit. I hope you understand.
Okay.
So that is the reason why those items does not appear in the control account, because the
So
control account
what
is
about
about
the inwards
credit,
account?
carriage inwards and carriage outwards.
Yes, please.
So that one is when you buy and they deliver the goods to your doorstep, that is carriage inward. Are you getting that?
Yes, please.
And also when you sell and then the goods have been delivered to your customer, that is carriage outwards. But remember, somebody will not deliver a good or carry the good to your shop and then you will not pay. You tell the person that you want to owe him. Would that make sense?
No, please.
So anytime they carry the goods to your shop, that one you expect to pay them with cash. So that one also involves cash. That is why we don't also bring it to the control account. Are you getting that?
Okay. So what about the first one? The first point.
Provisions for doubtful debt. Yes. These are monies that you set aside. Are you getting it? In case some of those who owe you doesn't pay, then you use that money to replace it. So you know that one also involves cash, right?
Okay.
Because it is money that you are setting aside, and anything relating to cash, we don't mind it. I hope you understand.
Yes, please.
All right. So I think that is the understanding. Okay.
Thank
you very much.
Okay, sir.
You're welcome. All right. Sir. So I think, hello.
Please, can I come in?
Yeah, let me hear you, but make it quick.
Okay, so please, I want to ask, why do we record the credit sales at the debit side of the purchase ledger control account, not the credit side?
Okay, but have you understood that the sales ledger is your customer's account, right?
Yes, please.
Do you understand that one?
Yes.
So when you are selling to your customer, will your customer receive or not?
Yes, they will receive.
He will receive. And what is the rule for double entry? Debit the receiver, credit the giver, right?
Yes, sir.
So if your customer is receiving, why wouldn't you debit his account? Are you okay now?
Yes. Okay.
Thank you. All right. So I think the questions will slow us down. So let's start. If you have questions, you can pause the questioning, keep your questions. Let's finish this, and then we can answer them as much as possible. I hope that is fine. All right. So Tisha, let's continue. After credit sales, what happened?
Cash purchases.
Cash purchases.
Yes.
You remember, anything relating to cash, we don't mind it. We skip it, right?
Yes.
So we move on. Okay?
Yes.
All right. So let's look at what happened after cash purchases.
Checks received from credit customers, 500,000.
Checks received from credit customers. So remember, our customers' account is a sales ledger control account, right?
Yes.
And then we've been told that we have received checks from them, meaning they are making payment, right?
Yes.
Okay. So if they are making payment, right, they are giving us money, will the amount that they owe us, will it reduce or it will increase?
It will reduce.
It will reduce. So remember, anything that reduces the customer's debt will be credited to his or her account. Or the other way around, they are making payment. They are giving out cash. They are giving out check. They are giving out money. So credit the giver, isn't it?
Yes.
So it means that this transaction is supposed to appear at the credit side of the sales ledger control account because it will reduce the amount they owe, and also it shows that they are paying the amount that they owe to reduce it. So let's show checks received. Some people write check received and some people write bank. It's the same thing, okay? So let me use, okay, let me just go by the question, checks received. Check received. Okay. What is the amount?
500,000.
500,000. Okay. So that is all that we need to do to enter it at the credit side of the debtors control account because they are now paying. So it will reduce the amount that they owe us. Please, I hope it is understood. And let's move to the next transaction.
On the diagram that you showed us, had
Please, I said if you have questions, you can pause them now. I want us to finish this question. I don't want us to use all the time and will not finish this question. Okay. So please just keep your question. Take note of them. When we are done with this, I will take questions. Okay. All right. So if you have any question, just write it down. All right. So Tisha, let's look at the next transaction after checks received.
Allowances from suppliers.
Allowances from. The transaction speaks for himself. Allowances from suppliers, right? So allowances from suppliers means that they are giving us some briefing space. Giving us some incentives, allowances, right? So if you owe them, you owe your suppliers, and now they have given you some allowance, maybe some incentive. Would this incentive reduce the amount you owe your suppliers, or it will increase the amount you owe your suppliers? I'm asking the class.
It will reduce.
Reduce.
It will reduce the amount that you owe your suppliers. And anything that reduces the amount that you owe your supplier goes to the debit side of the supplier's account, right?
Yes.
So these allowances is supposed to show up at the debit side. Allowances. What was the amount?
1,500.
1,500. Okay, because this allowance will reduce the amount that we owe our suppliers. 1,500. Okay. Yeah. So that is the treatment. Always, you understanding the question is part of answering the question. Understand the transaction and know where to take it. That's all. Please, let's move on. After allowances.
Cash received from credit customers.
Cash received from credit customers. So remember, credit customers are our debtors, and we have been told that now, initially they pay us with check. Now they are paying us with cash. The amount that they owe us, they are trying to eliminate it by paying us more. So now they are giving us cash. And if they are giving us cash, what will happen? It will reduce the amount that they owe us. And anything that will reduce the amount that they owe us will show up at the credit side of their account. Okay. Also, debit the receiver, credit the giver. In this case, our customers are the givers. They are giving us the cash. So their account should be what? Credited, right?
Yes.
So you go to the credit side of their account and write what? Cash received. Cash received. What was the amount?
70,000.
70,000. So 70,000. Okay, let's proceed. After cash received, what was the next information?
Discount received.
Discount received. So in this case, the business is receiving discount. So now you ask yourself, do you receive discount when you are buying? or you receive discount when you are selling? I'm asking the class, please help me out.
When you are buying.
Do I get discount when I'm buying, or I get
When
discount when
buying.
I'm selling? When you are buying,
When
right?
buying.
When you are buying.
All right.
Yes.
In this case, if you are buying, who are you buying from? Are you buying from debtors or you are buying from creditors?
Creditors.
From creditors.
So it means that discount received will show up at the what? Creditors control account. I hope you are following the analysis.
Yes.
So
Yes, sir.
we are buying from our creditors and they are giving us discount. So if they are giving us discount, the next question is to ask yourself, this discount that they are giving us, will it reduce the amount that I owe them, or it will increase the amount that I owe my suppliers?
It will
It will
reduce.
reduce.
It will reduce it. And anything that will reduce your indebtedness, it show up which side of the creditors control account, debit side or credit side?
Debit.
Debit.
Debit side. So it means discount received will show up at the debit side. Discount received. All right. So discount received.
11,000.
11,000.
Yes.
Okay, so 11,000. So this is the analysis that you just need to understand control account. Will it increase my indebtedness or it will reduce it? And if they are also paying you, will it reduce their indebtedness or it will increase it? And you are good to go. Please, let's move ahead. After discount received, what happened?
Checks paid to creditors.
Checks paid to creditors.
Hello,
So
Hassan.
now you are giving your, yes.
Good evening.
Yeah, evening.
Please, can you go over the allowances from suppliers and the discount received?
They both will reduce the amount that you owe your suppliers. Are you getting it? Whether they give you discount or they give you allowances, they are all incentives to you. So it will reduce the amount you owe them. Are you getting that? Hello?
Yeah, okay.
And anything that will reduce your amount you owe your suppliers, it will show up at the debit side of your supplier's account. Okay.
Oh, okay. I thought it would be recorded at the credit
Yes.
side.
And so remember, so no, it will not show up at the credit side because although they are giving it to you, but the effect it will have is that it will reduce the amount you owe them. So that is where you have to look at it from, whether your amount, the amount you owe them is reducing or it is increasing. If it is increasing, you record the transaction at the credit side. But if it is reducing the amount you owe, it will show up at the debit side. That's all that you need. Okay?
Oh, okay.
Yes.
Thank you.
All right. You are welcome. All right. So let's take the next information after discount received. What happened?
Checks paid to creditors.
Checks paid to creditors. So now you are paying your creditors with check. You have given them check to go and withdraw money as a payment. Remember, when you give them check, will it increase the amount you owe them or it will reduce the amount you owe them?
It will reduce.
It will reduce.
So if you are reducing the amount you owe them, where do you go to?
Debit.
Debit side of the creditors control account.
Yes.
So we write check, checks, what? Paid or checks received. So let's say checks received. No, I'll just write checks paid. Okay. To creditors. Checks paid to creditors. What was the amount? 11,000, right?
No, checks paid to creditors 370,000.
That's
370,000. 370,000. I believe I got it right,
Yes.
right? All right.
Yes.
So let's see the next information after check speed to creditors.
So after check speed, contract settlement.
Contra settlement. This is also a very interesting. So contract settlements are sorry. Check. We have what contra settlements. So contra settlements are a situation where the person you were owing has also taken something on credit from you, and then you people have balance off. So in this case, we were owing our creditors, and then our creditors also happen to buy from us on credit. So it will strike off. So contract settlement also that is the same thing that we call set-offs. Okay. So set-offs affects both the sales ledger control account and then the purchases ledger control account. So the only thing you have to understand with set-offs is that you record them, the same transaction, you record it twice in both accounts, but you record it at the side that is reducing their debts. Are you getting it?
Yes.
So if that is understood, under purchases, under the creditors control account, which side reduces our debt?
Debit.
Alasan, please hold on.
Debit.
Hold on.
It's debit.
Lorisha Gamado, please mute your mic. You are sewing. You can hear the machine. Please mute your mic. Okay, Alasan, continue.
All right. Thank you, Senior. All right. So remember, it is the debit side of the creditors control account that reduces our indebtedness, right?
Yes.
So we record the set-off or the contract settlement debit side. So set off. What was the figure, please?
14,000.
What was the figure?
14,000.
So 14,000. Okay. So we got it covered. And also remember, this same information will affect the sales ledger control account at the side that is also reducing the debtors balance, right?
So yes.
So we go to the sales ledger control account. Which side reduces the debted balance?
Credit.
Is it the debit side or credit side?
Credit.
Credit side. So the set off will also appear at the credit side. 14,000.
Please, can you also write contract
14,000.
settlement?
Oh, Gamado, please.
You can also write contract settlement. It's the same thing. Okay. Whether set off or contract settlement is the same thing. Okay. All right. So I believe we are done with the contract settlement, right?
Yes.
Yes.
All right. So now let's look at the next transaction.
Bill receivable.
Bill receivable. Remember, before I even started, I made mention to you that monies that we are expecting from people, monies that we are expecting from our customers, we call it what?
Bill receivable.
Receivables.
We call them receivables. We call them receivables, right?
Yes.
So here we have seen bills receivable. That should indirectly tell us that this transaction has to go into the debtors control account, right?
Yes.
Because they are all effort by our customers to clear the debt that they owe us. Are you getting it? So it will appear at the credit side of their account, right?
Yes.
So we have bills receivable. Bills receivable. Please, what is the amount?
19,000.
Amount?
19,000.
19,000. All right, thank you. So we have 19,000. All right, so this is bills receivables. Okay, so what is the next information after bills receivable?
Allowances to customers.
allowances to customers. So you see, our customers is buying from us, and we have also given them some incentive to motivate them to buy more from us, right? So we are giving them some allowance to motivate them to keep buying from us. So this allowance that we've given them, will it reduce the amount that they should owe us, or it will increase the amount that they owe us?
To reduce.
It will reduce.
To reduce. So that is why allowances to customers will appear at the credit
The
side
credit
of
stuff.
the customer account. Allowance, the credit side, allowance to what? Customers. So I'll just write costs. What was the amount again?
29,000.
29,000. Okay. So that is allowances for us. Let's go further. Let's move on. Let's keep matching. This is all what control account is about. Will it increase my debt or it will reduce my debt? Will it increase my customer's debt or it will reduce his debt? That's all. Please, the next transaction.
Bill payable.
Bills payable. So remember, also from the beginning, I mentioned to you that monies that we also owe people, monies that we owe our suppliers is also called what? Payables, right?
Yes.
Yes.
So the bills payable suggests to you that this transaction should go to the what?
Creditors.
Payables control account. Remember, the creditors control account is also known as what? Account payables control account, right?
Yes.
Aha.
Yes.
So it means bills payable, payables go into creditors account, receivables goes into what? Debtors control account. All right. So bills payable. Bills payable. What was the amount, Tisha?
90,000.
90,000. Okay. So we have done justice to that 90,000. Let's move on. Bills
Hassan,
payable. What happened? Yes.
Hassan,
Yes.
please. The bill
Yes.
receivable. Okay, please. The bill receivable. We recorded it under the credit side of the sales ledger control account. Please, why did we record the bill payable under the debit side of the purchase ledger control account, please?
So bills payable, it is money that we are paying to our customers, our suppliers, right?
Yes, please.
Right? So
yes.
If you are paying to somebody, you are the giver and that person is the receiver, right?
Mm-hmm.
Yes.
So in this case,
yes,
our
please.
suppliers are on the receiving end, right?
Yes, please.
So if they are the receiving end, will you debit their account or you credit their account?
You debit.
You debit. So are you okay now? These are monies that we have paid to them. So it will reduce the amount we owe them. They will receive these monies. I hope you understand. Okay.
And please, kindly help me explain with the bill receivable, please. With the
so the bills receivables are the monies you were expecting from your customers and they have now paid you. Are you getting it?
But I've gotten it. But Hassan, if they have paid us, then I think we will debit it because we have received it. Or
no, this is their account. Remember, the sales ledger is also their account. Your customers, this is their account, right? So if this is their account and they are paying, are they not giving out?
they are giving out. But you therefore continue.
So if they are giving,
I don't want to waste the time. But you there continue, please.
Okay, so you can see me after the sure. Maybe after this. Okay.
Sure.
All right. So this is bills payable 90,000. What happened after bills payable, Tisha?
Dishonored checks.
dishonored checks. So dishonored checks. So let's say your customers try to eliminate the amount that they owe you by paying you with a check, right? So the time that they give you the check, it is assumed that they might have paid you or they have made payment to you. But unfortunately, so remember when they were paying us with the check was shown at the credit side of their account, right? Can you see it? Check received.
Yes.
And now you have taken the check to the bank, and the bank tells you that the check, there's a problem with the check, so they can't pay. So if you have taken this check to the bank and the bank have told you that there's a problem with the check, they can't pay, will you keep the check or you return it back to whoever gave it to you?
You return.
Return it.
You return it.
You return it, right? So if you are returning it, you give it back to your customers, right?
Yes.
Yes.
So if you give it back to them, they will take back their check. They are at the receiving end of their check. So what will happen to their account?
Debit.
The account will be debited.
Their account will be debited. So that is why this dishonored check should be shown at the debit side of the what? Debtors control account. Okay, to show that you have given them back their check. So this dishonored checks. Dishonored check. Please, what is the value of that particular check?
17,000.
17,000. Okay.
Yes.
So 17,000. Okay.
Hassan,
Yes.
please, how will you know whether that dishonored check is from the debtors or the creditors? Or is it that anytime you see
Always
it,
when you see this dishonored check, you should know that you are looking at the sales ledger control account, or it is a check that your customers give you and you are returning. So mostly this dishonored check is always related to the sales ledger control account. Okay.
Okay.
Yeah. So anytime you see this dishonored check, your mind should go to the sales ledger control account. Okay. And not the purchases. I mean, I hope you are okay.
Yes, please.
All right. So it means we can move on, right?
Yes.
Yeah. So Tisha, give us the next transaction.
Provision for discount on debtors.
Provision for discount on debtors. Remember the items that we are not supposed to record, right?
Yes.
Is provisions part of them?
Yes. Provisions for
Yes.
So it means we have to ignore it, right? It means we have to ignore the provisions. So we pass by it, we skip it, and we take the next transaction. We don't tackle provisions, okay?
Yes.
It doesn't show up in the control account. So let's move on.
Discount allowed.
Discount allowed. So remember, as a business, do you allow discount when you are selling, or you allow discount when you are buying?
Selling.
When you are selling.
When you are selling.
Yes.
So you allow discount to your customers, right? So if you give your customers discount, will that reduce the amount they owe you?
Yes.
To reduce their debt.
Their
To
debt.
reduce their
It's to
debt.
reduce their debt, right?
Yes.
So if it is reducing their debt, which side of the sales ledger control account, debit side or credit side?
Credit side.
Debit side.
Credit.
Credit side.
Credit side. Okay.
Yes.
So discount allowed will show up at the credit side. Discount allowed. So I'll just abbreviate it allowed. What is the amount, please?
9,000.
9,000. Because this particular discount will reduce the amount that they owe us. So it will show up at their what? At the credit side of their account. Okay, so let's move ahead. After discount allowed, what did we have?
Bad debt written off.
bad debt written off. Okay, we know that our customers owe us, but we have come to the decision that for how long it has taken them for them to pay us, we don't think they will ever pay us. So let's forget about that amount that they owe us. Let's declare it as bad debt. Let's write it off. Okay. So bad debt written off is the debts that you consider as gone forever, that you will never get it. Okay. So if our customers are owing us and now we have decided to let that go free, we cannot take it, and again, we cannot get it from them. Do you think that will increase their debt or it will reduce their debt?
It will reduce.
It reduce.
It will reduce their debt, right?
Yes.
Aha. So and anything that reduces their debt appears at which side of their account?
Credit.
Credit side.
Credit side. So that is why bad debt should show up at the credit side. What was the amount, please?
7,000.
Bad debt, 7,000.
7,000. Yeah.
Okay.
So in
7,000.
case
We
the
get it covered.
person later on comes to pay the money, how do you record it?
Aha. So if later the person comes to pay, you see what will happen. Okay.
Okay.
You see. Yeah. So after bad debt written off, what did we have next?
Refund to customers for overpayment.
Refund to customers for overpayment. This is very explanatory. They have paid us, but they have paid more than they owe us. So let's give them back the excess money. The money that the amount that have been overpaid. Let's say they owe us 1,000 Ghana cedis and they end up paying us 1,002. What will you do as a responsible business?
You credit
You send back the 200, right? Aha.
Yes.
So and remember, when we are sending back the 200 Ghana cedis, they will be receiving it. They will be at the receiving end, right?
Yes.
Aha. So that is why refund for overpayment will appear at the debit side of the debtor's what? It will appear at the debit side because this is the money you are giving back to them. They have cleared their debt and they have paid extra. So you have to give them the extra money back. So they will be on the receiving end and they will receive the excess that they have paid you. So them receiving will receive at the debit side, isn't it?
Yes, please.
So cash refund will show up at the debit side. What is the amount, please?
20,000.
20,000. All right. So 20,000. An obligation that they are fulfilling, but it is something that we are giving back to them because they have overpaid. So take your money back. That is what we are telling them. So we have given back their money to them. So what happened after cash refund to customers?
Interest charge on the
Debtors overdue account. So let's say we gave our customers 3 months to pay. Okay, we have given them 3 months to pay, and we have told them that after 3 months there will be a penalty to pay. And then we don't know what happened. The 3 months has passed and they are not able to pay. So automatically they will face the penalty that they are facing now. Will it add to their problems or it will reduce their problems?
Add
it
to
will
their
add.
Add to their
It will
problems.
add to their problems. And anything that will add to the customer's problems, that is the customer's debt, which side does it appear? Credit side or debit side?
Debit.
Credit side.
credit side.
Anything that
Credit.
increases the customer's
Debit.
debt, which side
To the
does
debit.
it go?
Debit.
Debit. Okay. So interest charge should show up at the what? Debit side. So interest charged? Please, what is the amount?
1,000.
1,000 Ghana cedis. Okay, so we have charged them interest, we have charged them a penalty. It will add to their problems more. We're adding more fuel to the fire. So let's see what happens after interest charged.
Sales returns.
Sales returns. So remember, we sold to our customers, but they have seen that some of the goods is not to their satisfaction. So they have to return them back to us, right?
Yes.
So when they make the returns, if they give us back these goods, will it reduce the amount they owe us, or it will increase the amount that they owe us?
It will reduce.
Reduce the amount they owe.
It will reduce the amount, right?
Yes.
It is reducing the amount. Which side do we go? Do you go to the credit side of the debtors control or the debit side?
Credit side.
Credit.
Credit side.
Credit side.
So sales returns should show up at the credit side. Sales return. Let me go up small. Okay. So sales returns. What is the amount for sales returns?
9,000.
9,000. Okay. 9,000. Okay. So what happened after sales returns?
Returns outwards.
Returns outwards. So these are goods that we also buy and they are not good and we are also returning them back. Are you getting it? So now you ask yourself, who do we buy from?
Suppliers.
So who are we returning to?
Creditors.
Them. Creditors.
We return back to creditors. Okay, so it means we should go to the creditors control account. So now, if we are going to the creditors control account, the returns that we are, the goods that we are sending back to them, will it reduce the amount we owe our creditors, or it will increase the amount that we owe them?
It will reduce.
To reduce the amount you owe them.
Okay, so if it is reducing the amount you owe our supplier,
Debit.
does it go to the credit side or the debit side?
Debit side.
Debit side. Okay, so that is why return outwards. Okay, return outwards. Return outwards. What is the amount for return outwards?
5,000.
5,000.
5,000. Okay, so we are done with return outwards. Okay, so what is the next transaction after return outwards?
Sales ledger. As of 30th
Sales ledger.
2018.
Please take it again, Tisha.
Sales ledger as of 30th June 2018. 300 cedis credit.
300 cedis credit. So it means that we are now coming to close the account. All the information has been exhausted, right?
Yes.
Yep.
Right?
Yes.
Okay.
Yes.
So and we've been told that sales ledger control account credit side, right?
Yes.
What was the amount for the credit side?
300 cedis.
300 cedis. So this 300 cedis, that the question tells you that take 300 cedis to the credit side of the sales ledger as a what? Closing balance. That is the balance brought down. Please take note.
Yes.
This is the balance brought down for the credit side. Okay. So it means that the 300 cedis is a balance brought down for a credit side of the sales ledger. So you just write it below the totals box. Okay. And then also you should know that what is a carry down at the credit side will be a brought down at the so what is brought down? The 300 is a brought down at the credit side. It will automatically be a carry down debit side at the what? So you come and record the same 300 cities as a carry down. 100 cities, 300. That is what you need to do. Okay. They have told you that this 300 cities is the closing balance for the credit side. So that is a balance brought down. And also, you know that any brought down is automatically a carry down at the other side. So that is why we're having the same 300 here as a carry down for sales ledger control account. I hope we are all together. What I am saying is that the question says sales ledger credit balance 300 cities, right?
Yes.
If the question is saying that the 300 cities is a closing balance for the credit side, are you seeing the 300 at the credit side?
Yes.
Yes.
Can you see that?
Yes.
You can see that, right? Uh-huh. So
Yes.
what you have to know is that the 300 cities has been shown here. The only thing you have to know is that it is a brought down. You shouldn't treat this as a carry down at the credit side. Okay? They have told you that this is the closing balance, and the closing balance is always the brought down. Please, are you getting that?
Yes.
So the closing balance is always the brought down. So now they have given you the brought down as 300 Ghana cedis, and I'm telling you guys that automatically when you have a brought down, you should know that it was a carry down somewhere. Are you getting it?
Yes.
Aha. Always the brought down is a carry down at the opposite side. So now you are having the brought down at the credit side. Where would the carry down be if we are looking for the opposite side? Debit side. So that is why the same 300
Debit
Ghana
side.
cedis is here at the debit side. Please, are you now okay?
Yes.
Yes.
Yes. Yes.
Are you getting that? Aha. So this is just simple. They have given you the brought down for credit side. You take it there and also post it to the other side or the opposite side as a carry down. That's all that you need to do. All right. So let me cancel it and let's continue. What was the next transaction, please?
Purchases ledger.
So purchases ledger, it means that we are heading to the purchases ledger control account too, right? We are not stopping at only the sales ledger, but we'll go to purchases ledger too. All right, so let me zoom in a bit. So let's have our closing balance for purchases ledger too. Let's do justice to that one too.
100 cedis debit.
100 cedis for debit. So it means that they have given us the brought down for a debit side of the purchases ledger too. Are you getting that? Remember, the closing balances are always the brought down. So the 100 cedis is the brought down here. 100, you bring it below the totals as what? Balance brought down. And also, as we did to the sales ledger control account, it will be a carry down at the opposite side. So we come to the debit credit side, balance carry down 100 cedis. That is all that you also need to do. So if I zoom it back, you will see that the 100 cedis that is here as a brought down is also here as a carry down, right? Can you see that?
Yes.
So that's all that we need to do. That's all that we need to do. All right. So if this is well understood, let us, I think we have had all the transactions posted to their accounts where they should be. They are there now. So now let us close the account. Let's get the totals for these two accounts, okay? So what we have to do is that I will need one person to add the totals for the debit side of the debtors control account, and another person should add the totals at the credit side, okay? Let's do this quickly, okay? Because I know some of us may have questions. So let us close up the account, and then let's see the questions that people will have so that we can answer them to the best of our ability. So one person should do the debit side of sales ledger. One person should add the total for the credit side for sales ledger. Let's do that quickly. 76,000 plus 700,000. Okay, plus 17,000 plus 20,000 plus 1,000 plus 300.
814,300.
814,300. So that is confirmed. All right, I had the same figure. So 814, debit side is 814,300. How about the credit side? Let's do the credit side. Please, what do you have for credit side? Credit side.
657,520.
657,000.
520.
Are you sure?
Yes, that's what I got.
Okay.
Yes, I got it.
220 plus 500,000 plus 70,000 plus 14,000 plus 19,000 plus 29,000 plus 9,000 plus 7,000 plus 9,000. You should be getting 657,220.
Yes, 67,
Yes.
60,
I
Plus
had the
300.
same.
67,220.
220, right?
Yes,
Yes.
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 So remember, to close an account, you use the bigger figure. So we can see that 814 is bigger than 657, right?
Yes.
So it means we use the 814,000 as our totals, okay? So we record it inside the totals box, which is 814,300 for both sides. 814,300. So this is our, and then we do not stop there. The 657,220 that we got, we subtract it from the 814,000 to get our balance carried down. So let's do the subtraction.
Yeah, that's
Okay.
157,080.
157,080. I think you are right.
Yes.
So this will be our balance carried down. Balance carried down. 157,000. 157,080. And also remember, once this is a carry down at the credit side, what will happen to the debit side?
It will be brought
To
down.
be the brother.
It will be a brought down. So you have balance brought down. Balance brought down. 157,080 cities. Okay, so that is it. So we have successfully closed the sales ledger control account. Let's close the purchases ledger control account as well. Okay, so I need somebody, one person should do the credit side, and then one person should also do the debit side of the creditors control account. Okay,
awesome.
So let's do that and let's see what we get.
What did that mean?
542 450.
542
450.
424. Are you talking about the debit side or the credit side?
The credit side.
Credit.
542 550.
Credit side 542 440. 550.
Yes.
Okay. So
and the debit side is.
I'm coming. Let me get this one. 542 550. So this is the credit side. What did you get for a debit side, please?
491600.
491,600. So I think I had the same thing. Okay, so now which one are we closing the account with? These two figures. Which one do we use to close the account? The 5. Why the 5? Why the 5?
It's the biggest one.
Where is the biggest one? Biggest amount.
It is the biggest among the two. So that's what I want you to keep in your mind, because you'll be balancing, sir. You'll be closing accounts. So you should know how to close an account. So 542 550 550, and then we bring it here too as the totals 542 550. Okay, and then you remember we do not stop there. We subtract the 491 from that, right?
What is it? Yes. 50,950.
50. Okay.
950.
Okay. All right. So I'm coming. Let me clean this. So remember, we balance the purchases ledger with the debit side, right? Because it was a debit side that was bigger. So it means our carry down will be, sorry, it was a credit side that was bigger. So the carry down will be at the debit side. So we have balance carry down to be what? 50,000 and 950 Ghana cedis, right? 950. So as this is a carry down at the debit side, it will automatically be what? Here, debit credit side, it will be what?
Brought down.
Automatically be the brought down for the debit credit side, 50,950 Ghana cedis. So I believe we have done justice to this particular trial question, which was given to anybody doing accounting this semester as a trial question by one of our lecturers, which is Mr. Iman, not Doc himself, but the TAs. So we have solved that question. And you can see that the work has been beautifully done. So So this is the control accounts. This is how we solve control accounts questions. Get the transaction and ask yourself, where will it go? Debtors control account or creditors control account? Will it go to the customer's account or it will go to the what? Supplier's account? If you identify that one first, then you ask yourself, which side will it appear? Is it the debit side or the credit side? It depends on what it is doing to your debt. Is it increasing my debt? Is it reducing my debt? Is it increasing my customer's debt? Is it reducing my customer's debt? That will show you where to post this transaction. And that's all that you need for control account. Is this difficult?
No, but tricky.
Is there?
I didn't understand anything, Hassan.
It's not difficult, but it's tricky.
It's trickish. Oh, Mr. Ima, you said you didn't understand anything.
I follow 50 give but nothing entered. I won't lie to you.
Oh, Mr. Ima, don't worry. Don't worry. I understand that at the end of the day, it's not everybody. It is not everybody who understand it 100%. But the most important thing is you have seen how to go by control accounts, right?
Yes.
So don't worry. We still have more time to prepare before exams. And as I mentioned to you, Mr. Ima, control account is likely to come 90% probability that it will come, or let's say 95% probability that it will come in the exam. So the only thing for you to do, or for us to do, is to make sure that we understand the topic before we get to exams. So that is all that we need to do. All right.
Mr. Lazan.
Right. Yes, sir.
Please, so when we were doing the addition for the purchases control account, you added the 100 CDs for the carry down balance of carry down. Is it supposed to be?
Is it supposed
to be so? You know, if you take a look at the okay. I just wanted to understand that.
So have you understood now?
Yes, please. So wait, it goes across for both the sales and the it goes across.
It goes across the 100 CDs.
Okay. For both credit and
so once it is a brought down at one side, it will be a carry down at the other side. Isn't it? Yes. So that's all that you need to understand.
Okay.
Yeah.
Thank you very much.
So please, I want
Thank
to
you
know.
for asking too.
Please, I want to know those two accounts that we just worked on. Which one is the for suppliers and which one is the for customers? I want to know.
So customers is the sales ledger account, okay?
Okay.
And then creditors or suppliers is the what? Purchases ledger control account.
Okay.
I hope you understand.
Yes, please.
So customers is sales ledger, creditors, suppliers is what? Purchases ledger. That is it.
Okay.
Yeah.
So anything that the supplier receives goes to the credit side.
Anything
the supplier receives goes to the credit side.
Anything the supplier receives from you will go to the debit side of his account. Are you getting it? And anything the supplier gives out will show up at the credit side of his account. But you have to know that anything that the supplier also gives to you will compound your problem, will increase your problems. Are you getting that?
Yes.
And also, anything you also give to your supplier, we assume that you are making efforts to clear your debt by paying. So anything that you give to your supplier you are trying to pay off your debt. So it's showing up at the debit side of his account shows that your debt is also going down. Deborah, I hope you understand.
Not that much. So I want to know. Is the credit the minus or the plus?
Yes. So the credit is the no, please. Please come again.
Is the credit the minus on the supplier's account and the debit the plus on the supplier's account? And so I want to know those two differences.
So with the supplier's account, the credit is the plus. Okay?
Okay.
And then the debit is the minus. So that is why anything at the credit side of the account is adding to your problems. Remember, I used the word is adding to your problems, right?
Okay. Okay.
It's plus not addition.
Yes.
And anything that you also give to the supplier will show up at the debit side, means that you are reducing the amount you owe him. It's minus, not reduction or
Yes.
subtraction.
Yes. Yes.
So with the supplier's account, the plus is the credit side and the minus is the debit side. Okay.
Okay.
Deborah.
Yes, sir.
All right. Thank you. All right. So I think all right. Juliet. So I will attend to all of you. So just keep your hands up. Juliet, let me hear you.
Alasan,
Yes.
everything was going smoothly until you started the account.
And so
when you started, I got entirely lost.
Your line is breaking. I'm not hearing you well.
Hello.
Yeah, hello.
Can you come again with where you started closing the account?
Yeah, please, I'll
Oh.
drink water.
Hey, who's drinking water?
Madam, if your own is just a closing sign, then you are okay.
Julie?
Yes, so be that.
Julie?
Yes, so be that.
Oh,
Julie?
my boy.
I'm here.
All right. So to close an account, okay? You don't know how to close an account, right?
When you were adding up the debit and credit sides, it's like you didn't add the balance carry down and balance go down.
The balance, so you see, when you are adding, we only add the figures before the totals. Are you getting it? Not the figures after the totals. Are you getting it?
Okay.
So for the debit side of the sales ledger, we start from 76,000 to 300 cedis. Are you getting that? We get the totals for that. And then at the credit side of the sales ledger, we start from 200 cedis to 9,000. That's the sales returns. We stop at 9,000. Are you getting that?
Yes, I get that.
And we look at the two totals. Which one is the bigger? So when we did, it was the debit side which was bigger. It was 814,000. So it means we use that figure for both sides as totals. And then the totals we get for the credit side, we will not ignore it. We need it to get the carry down. So after we use the total for the both sides,
You are doing so well. God bless you so much. The understanding is coming. Few.
Mr. Alpha, seriously, you help me, because this one, I just some small parties prepared, and boom, we are good. Because I get a concept.
Yes. God bless you dearly.
Yes.
My dear son.
Let him finish it.
Yeah, hello.
Hello.
Yeah.
Hey.
So I can see that so I had a call on my line, so it disrupted the network. So this is how we close account. First of all, get the totals for the two side and use the bigger value to do the totals. And then you subtract the lesser value from the bigger value to get your balance carried down. That is how we close an account. Julie, I hope you understand.
Yes.
Yeah. So this way that we have done, it will be uploaded to the accounting platform. So you will get this work after the class. So on your own time, you can try your hands on it, or you can try, as you say, you're having problem with the closing balance. Just as I've explained to you, you add the total for the both sides, and then to see that you're able to get your carry down, and then you add it to the side which was lesser. That's all that you need to do. Okay.
Okay. Thank you.
Yeah. All right. So let me take Abner, Pat. Abuna. Oh,
Hassan.
I think yes.
Hassan. Please, how would you know that this question given to you is a control account question?
Oh, they were